So we are seeing selling today in Amazon, apparently cloud growth disappointing investors. Let's get more from Scott Devitt, Managing Director in Equity Research, Internet, E-commerce and Online Travel at Wedbush. Scott, great to see you. Thanks very much indeed for joining us. What was your take on these Amazon numbers?
Well, it's tough when you beat on almost every metric and the stock goes down 6-7%. But what's happening is, half of the value of this company is in the retail and advertising business, where each of the business units overperformed and the company earned more money than expected. But expectations in AWS were rising because Azure had such a good quarter, and as did Google's compute business. And so the company effectively missed the whisper, if you will, in AWS. And that's caused concern and kind of a positioning of Amazon's AWS business as an AI laggard. It's not something that we subscribe to ourselves, but the narrative is going to hold until Amazon can have a quarter in which AWS actually does accelerate, which should happen in the back half of this year, given the incremental contribution of Anthropic, but it hasn't happened yet.
One thing that you think investors are overlooking here are actually two things: strong numbers in online retail and advertising growth.
Beats across the board there. And even though AWS margin missed, the overall margin of the business beat by 13%. That's how strong retail and advertising were. So we do a sum of the parts on Amazon, as well as looking at valuation multiples. But in our sum of the parts, about half of the value of this company is retail advertising, which it gets no credit for that overperformance. And so effectively, if you think of the business on a sum of the parts basis, you would argue that the AWS business value just declined by 12% because it's only half of the value of the company. So it doesn't make sense longer term, but stock prices are facts, in the short term. So I think we have to wait 3 months until the company can start to get benefits from some of its AI initiatives and investments, which is this Anthropic contribution that starts to show up more so in the back half of the year. And then the overall AWS number will likely accelerate and investors will be happy again. And then all of a sudden, AWS won't be a laggard.
So you said retail advertising is about half of the business?
So, of course, on a revenue basis, it's considerably larger. But when you look at and you value the components of the business relative to peers, by our assessment, about half of the value of the company is in the retail and the advertising business, with the other half coming from AWS.
Oh, sorry, retail and advertising. Okay.
Yes.
And how would we hear that they are in innumerable transactions on the internet? Even if you're not buying directly from Amazon, it's going through their vast infrastructure and systems. How do you value that business, that kind of behind the scenes logistical support they provide?
Amazon's logistics business is it's the most dominant logistics operation in the world, and outside of possibly some efforts in China. I mean, you can see it in UPS and FedEx. Amazon is dominating by taking a larger portion of overall partial shipments in the Western world. So third-party merchants are using Amazon for fulfillment in ways that product used to be delivered by UPS and FedEx. So that's a very dominant, piece of the business. It's underappreciated because it's just a component of the overall retail operation. But the other thing that I think is underappreciated is that there are synergies between AWS and the retail business and the advertising business. So when you see something in the retail and advertising business accelerate, very likely it's because of intelligence that the company in aggregate is gathering from what's happening with AWS and AI. And so while you don't necessarily always see it in the output in AWS results, at the parent level, Amazon's benefiting, quite significantly from AI, just as was shown by Meta, in the first quarter of a consumer-facing company really showing effects of AI. I think you're starting to see that in Amazon as well.
Give us your thoughts on Meta. The stock is down today in tandem with the markets. It hit a record high yesterday. And apparently investors seem happy that Zuckerberg is spending heavily to stay ahead in AI.
Just a massive inflection in that business. And so, like I said, we've been looking for use cases in the wild where, semiconductor companies were making money on AI, the cloud companies were beginning to make money, but, the use cases in the world weren't being commercialized and scaled quite yet. Well, Meta, kind of took care of that. Their time spent on their platform is rising due to AI. The matching technology for their advertisements against their users is improving as well, which drove a 600 basis point acceleration in top line. So very healthy growth, which justifies the investment, in AI and gives the company a bit of a pass. So even though our margin goes down on a forward basis because of the increase in spend, the overall profitability of the business is higher than it would have been otherwise. So Meta to us seems like a very clean story coming out of that quarter.